In this video, I'm going to show you a special situation involving Pan American silver in which you can essentially buy it at a discount to the current market price. Let's take a look. So first, an overview of Pan American Silver. They say it's the world's premier silver mining company, and I would generally agree with that. They have the largest production of silver in the world, and they have the largest reserves globally. They're diversified throughout the Americas, particularly in South and Central America, I would say, are where the bulk of their operations are. And they have a few catalysts that are going to be coming online in the coming years, one of which we're going to be focusing on in this presentation. So there's the Escobar mine, La Colorado, and Navidad in Argentina. So all of these have massive silver and precious metal reserves and very important to the future of the company. So what are you actually getting when you buy Pan American Silver? What do they do? So they produce primarily silver and gold, although they also produce some lesser metals, copper, zinc, and lead. The bulk of their revenue is from gold, actually, in this quarter, in this year, but their reserves are primarily silver. So it is a diversified mining company, you could say, with emphasis on silver as opposed to a lot of other mining companies that will just be gold. And they own many different mines. So in this situation, we're going to be focusing on one mine in particular and sort of taking all of the rest of Pan American Silver as given. I think it's a great mining company, and for the right price, it is a good buy. I don't know exactly what that price is, but we're going to see why I don't think that's very important in this situation. So we're looking at the Escobar mine. This is in Guatemala. It's one of the world's best silver mines, high quality, low cost of production, large reserves, proven and provable. Excuse me. Sorry about that. So the only thing about this mine is it's not in operation, and that's because the mine's operations were suspended pending the completion of an ILO 169 consultation. So what that means is that the government came in and said to Pan American Silver, stop mining, stop it. You need to consult the native population. That's the ILO 169, excuse me. It's a United Nations thing that says you need to consult local populations before you go taking their natural resources. And that's what's happening here. The company that owned the Escobar mine beforehand, it happened in 2017. They've been delaying, and things have been going off and on with the Guatemalan government and the native population to that area. But we can conclude some things based on some developments. So next, we're going to be looking at Pan American Silver F, PAAS F, which is the contingent value right that expires on February 22nd, 2029, so in almost 9 years, and it's exchangeable for a less than one share of Pan American Silver if, and only if, the Escobar mine reopens and ships silver from the mine. So a contingent value right, if you're not familiar, and trust me, I wasn't familiar either, so you're not out of the loop or anything, and that's part of the reason that this opportunity exists, because a lot of people don't know what this is. A contingent value right is essentially a company will issue a right to its shareholders or as part of a transaction, as in the case with Pan American Silver, that you have the right to exchange or to own shares if something happens. And in this case, if the Pan American Silver Escobar mine reopens, you get this number of shares, and you don't have to pay for them. You just get them. And so, and it basically happens on the spot, at which point you get the shares and you no longer have the rights. So this is what it looks like if you're looking at it. PAASF, sort of a tongue twister, Pan American Silver contingent value right expiring 2/22/2029. The price chart generally follows the price chart of Pan American Silver, but because it is so thinly traded, it feels like the price has a tendency to do weird things and not really move all that much. It can have pretty wide daily ranges, and it's a very interesting thing. If you're familiar with investing in micro caps, you can understand how it's a weird sort of situation. It's not like most mid or large cap stocks in terms of the market conditions. So this is how I think of the contingent value, right? This might look a little bit messy at first, but I promise you it's going to make sense. And we're going to see here, just look here, 49% upside. So what's the Pan American Silver price today? So approximately at the time of recording this, it's $33.67. It might be a little bit higher. And the Pan American Silver contingent value, right, is at 0.9 cents. So this is how many shares you get from the contingent value, right, if the mine reopens, that is. And here we're going to multiply the Pan American Silver share price times the number of shares you're going to get if the mine reopens. And that's going to leave you with this number. So this number is what I would say if today, right now, it came out that the mine was producing silver again, they consulted the people and all the problems were solved, this is what would happen. You would get this amount of money per Pan American Silver contingent value, right, that you own. And so we need to sort of separate that from the actual reality, because obviously that's not going to happen today, and it might not happen. So here we're going to take the Pan American Silver contingent value right price and equal that to this. It's basically an expected value. We're going to take this and divide it by this, or take the share price and divide it by this to get a probability. And that probability is 53.8%. So 53.8% chance that the mine reopens is essentially what the market is projecting. And I hope that makes sense. If you're familiar with statistics or expected value, this will make sense. Obviously, if you know Pan American Silver, they do pay a dividend. This model does not take into account the dividend because I see the upside is so large. You don't really need to be exact. It's sort of the concept of margin of safety. You don't need to be exact because you could drive a truck through the margin of safety of 50%. So, and then this is my value. We're going to be taking F is going to be fair value, so that's going to appear in this cell, and we're going to multiply that, or we're going to get that from multiplying what I think what it would be worth today multiplied by the probability of that happening. So I have it at 90% here. I'm actually putting it as even less, 0.8%. So, 0.8, which would be 80%. Sorry, I'm messing my words up. And that equals a 50% upside, essentially, if it's an 80% probability that the mine reopens in the next 8 years. And as you can see we're going to go back sort of quick here. Pan American Silver obviously views the Escobar mine as integral to their operations. They view the Escobar mine as one of the catalysts for Pan American Silver in the coming decade. If they viewed the probability of this mine reopening as fairly low, it probably wouldn't be in their catalysts. They probably wouldn't be advertising it like it is such a big deal, because they'd be saying, okay, that's not actually worth very much. It doesn't really matter. But because they're advertising it, the management team, the insiders of the company, believe the Escobar mine will reopen in the next few years, I believe. And we see that here. One of the world's best silver mines. Obviously, they want to get one of the world's best silver mines open and producing. So that's what we're looking at with this. If you look in the news, you're going to be able to see that I think the news actually backs up what I'm saying, that there's actually a much higher probability of this mine opening than the market is predicting. And I say that because if we look at some of the things their former energy and mines ministers have said, like one guy, he said that this is basically just extortion of foreign companies. So the government is using this law of consulting native people to try and extort Pan American Silver, and it's basically just a big mess. But I think that the government is looking to get this mine open because if we look at the economic incentives, if the mine is closed, they don't get any tax revenue from that. But if the mine is open, they get lots of tax revenue from that. And if we know anything about governments, they want the tax revenue. They want the money. So that's why I think the probability is actually quite high. And I think the upside is so high that it's not even worth building a model that includes, sorry about that, that includes dividends in the model. So this is what I use for valuing the contingent value, right? Tell me what you think. If you have any questions, let me know in the comments. I will try my best to answer them. And if I can't answer them, I will try and direct you to another resource. So thanks for watching. Peace out.